we seem to have bullish sentiment driving the NSE All Share Index up, but this at a time when there are various stories flying about concerning the president's health or lack thereof. I mean, what impact are political rumblings having on the markets at this stage?
Thank you very much, Alicia. Despite the news about the news about the whereabouts of the whereabouts of the president, we've actually seen the market on the uptrend, and I think the reason is not far-fetched. We've actually seen the market that has lost close to 70% over the last two years, and of course we are seeing a gradual recovery generally in the market. I think because of the beating that the market has taken over the last 2 years, the investors are not really impacted by what is going on with the news of the whereabouts of the president. By and large, we've actually seen the activities of the CBN governor, who has actually been working in consonance with other regulatory authorities of the financial services of the economy, and they are trying to put in place all the things that needs to be in place for us to have a robust and developed market. Going by that, I think investors are getting more and more confident with outcome of the audit of the banks, the activities of the CBN governor, all the regulators that are also having their hands on the deck for us to have a recovery that is sooner than expected, and we think that has actually been what has actually been driving the market. I think even from the foreign investors, institutional investors' point of view, we think they are also very comfortable with the reforms that is going on that's being carried out by the CBN governor, and we expect the market to probably continue on its way up, knowing fully well that the results of even the non-banks have actually been very good over the past 1 year, despite the fact that the banks have actually been having issues. And of course, we are actually seeing light at the end of the tunnel. The financial year end is over for 2009. The audit is over, and of course, the banks can now begin to lend and look for ways of actually driving their businesses to the next level. I think that is actually what investors are focused on, and we think the recovery should be sustained over the next couple of sessions.
Well, as you say, a lot of attention on the banking space right now, and you've put a lot of emphasis on some of the factors that are driving things over on that end. We've heard confirmation here in South Africa that First Rand is looking for a Nigerian partner. What kind of impact do you see this activity now having within that space as we move forward?
I think that is part of the reason why we are seeing an earlier than expected recovery in the market as a whole. We expect to see a lot of positive developments in the banking sector generally. I think it was also in the news yesterday or sometime last week that the Unity Bank was also in discussion with some foreign investors that are also looking at injecting about $500 million, $200 million in equities, and $300 million in debt into the bank. The arrangement has not been finalized. They are still in discussions, and we think that those are the kind of things that should drive equities up. First Rand Bank also has actually come out to say they are interested in buying one of the rescued banks by the CBN. We think it's also a positive development, or at least we know that by the time they are trying to take up a controlling stake in the bank, of course, they will definitely be doing it at a premium, doing a premium to what the market price of the bank that they're going to take over is. So I think that should actually spur investors' appetite for risky assets, especially the rescued banks, and we think that should actually impact more positively on the market generally. We've also heard from the angle of the asset management company that the CBN is talking much about, that they might just be able to take off some of these bad assets from the balance sheet of the banks. So all these developments and all these things that is going around, and knowing fully well that the audit is over, the investors are more confident with the books and the results that will be coming out from the banks. We think that those are going to be the things that should be the major driver of the markets in this year 2010, and that's part of the reason why we continue to see some level of recovery and comfort in the market generally.
Well, some of that acquisitive activity is certainly spicing things up. In the meantime, a trader that I was speaking to yesterday was saying that people are jumping in because values are so depressed right now that there's very little downside risk to take into consideration here. Now, while we know that banks have made full provisions as advised by the monetary authorities already, are the markets at all pricing in the possibility of further huge provisions coming to the fore at a later stage?
If we go by the comments that we've had from the CBN governor, you will notice that the market was significantly depressed as at August and September when this bank had turned out their results. The market has actually been on a downturn to a large extent between then and December 31st of 2009. And of course, we will definitely expect, we will not be surprised if we still see some level of provisioning from the angle of the banks as at their full year end 2009. But the beautiful thing is this: the investors and the market generally are always forward looking. And if we go by the assumption that you would have seen some provisioning as at 31st of December 2009, with the market actually recovering, of course, we'll definitely be expecting some level and form of write backs from the banks as well going forward. So I think it's a case of I think it's going to be a case of a win-win scenario for the investors generally. I think we've left the 2009 audits and processes that the CBN is actually trying to put in place. We've actually put that behind us, and we're actually looking forward. So even if the provisions come, I think it's just going to make way for an upside to what the banks are going to declare in terms of their earnings going forward. Market is already up about 6%, and of course, if you have actually written down and you are now you now have to write back, we think the write back will be part of the value drivers for the banking sector and the insurance sector generally, talking about the financial services as a whole. And we think that if you are looking forward and not trying to look at what we have left behind us, I think the only right thing to do is actually start taking position ahead of the good numbers that will probably be coming from the banks by the end of the first quarter of 2010.
So let's look at taking positions here, because we know that certainly looking at yesterday's performance, we're seeing quite a bit of volatility when it comes to individual counters within this space. We see them under quite a bit of pressure before bagging limit up gains by the close of the session. How exactly are you playing this space, and which stocks within the banking arena are attracting your attention right now?
Let's say ordinarily we would have expected that after the market is up for about four sessions, about 5 or thereabouts, would have actually expected the investors to start taking some profits. But if you look at it from as far back as 2008, you see that the market has actually taken a lot of beating, and I think it was just an opportunity for the long-term investors who are looking for real value to actually come into the market. So I think in 2009 was actually a year when we saw the structure of the market changing significantly. We had a lot of leverage buyers had to leave the market, forceful sales from their banks, and we saw some longer-term investors who are looking at for long-term value and long-term and serious value from equities generally. So they came into the market, they took up some position, bought them at distressed prices, and I think they are sitting pretty on their positions at the moment. Now that the market is on the way up, I don't think they already have the kind of returns that they have. We'd have expected ordinarily for the speculators to actually come into the market and start taking some profits, but it appears as if we have more long-term looking investors generally that have actually taken positions in the market. So the volumes are not really out there. If you look at the market turnover, it is still not that encouraging because we are still around the 2 billion mark, yet the market keeps going up. So it tells you that the supply level that we are seeing in the market is not that much. Any investor that actually wants to play the equities market should actually be looking at a longer time point, or should be looking at it from a longer time point of view. And anybody that's probably still taking position in the market today still has a value to actually extract. If we look at some specifics, we have some of the non-banks that have actually been doing very well all through year 2009. The likes of Dangote, Flour, the likes of NASCON, the likes of BCC, and yet the price didn't move. So I think what we are seeing, the early rally we are seeing, is just investors trying to react to the results that are actually being churned out from these companies. Then from the banking aspect of view, if you look at it, although most of the banks have actually had they've had the support level which they actually developed. If you look at the First Bank, for example, the stock was trading at 14 naira for about 3 months or thereabouts, and it wasn't really going down. There was sustained demand at those levels, and gradually the stock is actually inching up. Fine, from the result that we are expecting for full year might not be that fantastic, but if we are going forward and looking at the asset base of the company and their earnings generating liabilities, we think income generating liabilities, we think First Bank might still be a major mover in the sector. We expect all the big 4 banks to continue to do well going forward, especially GT Bank, whose results we are expecting not too far from now. As at their third quarter, they were still highly profitable. Same thing goes for Zenith Bank. I would think investors might just be trying to look at those stocks from that perspective.
Well, Olatunji, on that stock picking note, we're going to have to leave it there. And